Okay, so we're going to be talking about the peak formations and the 100 pip box and how to actually functionally use them, where to draw the lines, how to actually get in on the second leg of an M or a W, when to even look to get in on the second leg of an M or a W, and just overall how to build a thesis for the day and for the week, and kind of just know what to look for on any given day of the week. So we're going to start off explaining and talking about this pattern right here, because all of the setups are going to be based around this market maker template. At any given week or on any given pair, it's always trading in between peak formation to peak formation. All right. So you can imagine maybe this was a down moving market, and then we got a first green day where you get a peak formation at the low of the current week, a day that's attempted to make a lower low and failed, put in a large W, and then you maybe get a break-in structure or something like that. Now, this peak formation can be made on any day of the week. It just needs to occur at the low of that week. So the fact, this could be a Wednesday. This could be a Thursday. This could be a Friday. It could be a Monday. Then you get a first green day. But sometimes, you won't always get that first green day. You're actually trading down here in level 3. You might be looking for that level 3 reversal at the low of the current day or something like that. We're going to talk about that here in a few minutes. But as the week progresses, coming into the new week, coming into maybe sometime, maybe this is Monday, Tuesday, Wednesday, and you get a Thursday or a Wednesday, Thursday, Friday back up. It depends on the template. But first green day, peak formation, I'm going to talk about what is a peak formation, where to draw these lines and things. And then as the week continues, there's always going to be an identification for, hey, that's level 1 because they put in an M, and then they came down, they put in a W. That was the signal that level 1 could now be complete. And then we rise, we get a new M, we get a new W, and then a rise. And then that's going to continue to repeat. This could be 3 days of breakouts, 1, 2, 3 to the high. This could be high of week reversal. Maybe we have, maybe not 3 days of breakouts, but you look at the chart and you just got a really well engineered stair step, maybe like Monday, Tuesday, and then you come into Wednesday and you look for that midweek reversal. You could have trend trades. So if I'm in level 1 after first green day and I get a W at the low of the day, that's going to give me the opportunity to look for a trend trade. I've been yelling and screaming into the mic about not counter trending the peak formation, because in level 1, you don't know how far back they're going to pull back before going back the other way. And then once you get into level 2, now I have the opportunity for, if I look at the daily template and I say, okay, well, this is really well consolidated. They put in a peak formation at the high of the day. There's no low in place just yet, and they're trading back up into the high of the day. There might be a stop hunt trade back from the high of the day back down, 25, 50, 75 pips. You take that trade, it's over and done with. And then maybe now later in the session or later in the day, there's that W that forms, and then that will be the trend trade to continue. So this would be a session scalp, high of day, counter trend. The market is going higher, but based off of the daily template, I am taking this trade with the understanding that it is a stop hunt opportunity, 25, 50, 75 pips back down before that market resumes its otherwise uptrend. Then once you get up to the high and you're in level 3, now I stop looking for long trades and I'm only going to look for a short trade. So I'm going to look for a M high of day, looking for the M high of week. I can get those trades at the high of the day and at the high of the week. Or if I've missed this day, I come back the next day and there's a first red day. Now I know exactly what to look for on the following day. I'm going to look for a W at the low of the day, 3 levels of rise, and a high of day sell. And as the market continues to fall, now again, repeat the process. It's the same thing that happened over here. On this day over here, or at this point in the cycle, I could look for a W at the low of the day, counter trend, 3 levels up. I take the long trade. It's counter trend. I don't have a lot of expectation for that, but as long as there's 25 to 50 pips of space, I could take that as long as it's set up parabolic. But overall, what do I really want to look for? I want to look for that M at the high of the day. So like level 1, level 2, level 3 of rise. I get an M at the high of the day. And I take that short trade in line with my first red and the fact that we're in a down moving market. All right. And that cycle will repeat over and over again. All right. We're going to come down. I'm going to take a look. Peak formations. As I'm going through this, ladies and gentlemen, if you have questions, comments, concerns, you want to speak on something, please feel free. That's why I'm here. What is a peak formation? What in the world? Where do I look for them? Why am I looking for them? Okay, let's reference this real quick. So if I'm looking for peak formations on the day or trend trades in level 1, I need a W. If I'm looking for stop hunt trades, I need an M. And then overall, if I want the trend trade, I need a W. Okay, so there's different types of peak formations and where they're appropriate. But generally, I am looking for them at the high of the day, the low of the day, the high of the week, the low of the week. Those are going to be the most reliable. And those are overall the ones that I'm going to use in order to frame my week and also to frame my day. There's something called an extended M, where they put in a peak high, they've pulled back, and then they've traded back up into that high, extending the high further. But then soon after that, it will break down, and that's where the neckline comes in. This is the neckline right here. You have equal highs where they just trade back up almost equal. This is my least favorite variation because a lot of times it goes right back up. However, sometimes they do present, and then this will be your neckline right here. And then you have shortened M's as well. These shortened M's, a lot of times you've heard me talk about the half Batman where they run it up and then it pulls back and then it rolls over. Sometimes it'll present like that where it's a half Batman. Sometimes it'll be very obvious that it's just a shortened M. They attempt to trade back up towards the high and then it fails. There's the neckline. There's the high. It failed to make a higher high and then broke down, taking out the neckline of that M. Same thing goes for the W's, just on the flip side. Extended where they extend the low, equal where there's equal lows, and then a shortened where it doesn't quite make it back down to the low. I want to make a note on the shortened. A lot of times this could also present as a head and shoulders or an inverse head and shoulders where you got a left shoulder and then the head and then the right shoulder, and you're thinking, maybe they're going to go back down to the low, but you need to look left a little bit. And that is still a peak formation. It's just a head and shoulders instead of that shortened version of the M. So what do I need to use these for? I'm using them to frame my week, helping me to identify levels of rise and fall. What level am I in? Was there a signal day? I'm going to use to frame the day. If I have a signal from the previous day telling me, hey, I need to look for a buy low or a sell high, maybe I need to frame my day and look for peak formation low, 3 levels of rise, peak formation high, take my trade. Everybody hear me okay right now? I see somebody said that they're not able to hear. All right, I just want to make sure. So I'm going to give a couple of different scenarios, and we're going to walk through them together. Here's the scenario right here. First red day. So I'm trying to frame my week. I'm trying to identify best trades in order for me to take a trade on the following day. So first red day is presented. What is a first red day? We've had a peak formation somewhere along the way. Last week, this week, who cares? We've got level 1 of rise, level 2, level 3. Now that could present as 3 days of breakouts. I could just look at the 15 1-hour chart and see that they've gone up 3 times. And then I have a day that has attempted to trade higher and put in a peak formation high at the high of the week and close below the opening price for that day, giving me my first red day. All right, so now I have a first red day scenario. Good. On the following day, this would be like the first red day, right? And then the new day starts. What do I need to look for on this day? Well, if I have 3 levels of rise and a peak formation made at the high of the current week, and I'm on this day right here, I'm looking to trade this day, I need a peak formation to be made at the low of the day and 3 levels of rise somehow, some way. That would be a very good trading setup, and a peak formation now made at the high of the day after those 3 levels. So I can take my short trade, sell high. Now, sometimes it'll present after I get that first red day. You come into the next day, and Asia has put in a low, maybe London has put in a high, and the 3 levels is a little bit cloudy, but the day has already put in a low and they've already put in a high. And then coming into the New York session, they trade back up into that high, that peak formation that was already made earlier in the day, and it reverses very strongly out of that. Those are 2 different scenarios. Throughout the day, the market has moved up 3 levels and put in a peak formation high at the high of the day. Like I just said, coming into the New York session, market has traded back into the neckline of that M or W at the high of the day. Now I can take my short if it presents, like I said, in the session at a certain time of day. So this is that same exact scenario that I just saw from the previous slide. First red day, peak formation low was made in Asia. All right, so this is the 1-hour chart, 15-minute chart, right? Peak formation low. I've identified 3 levels up and a first red day. Beautiful. Now, on the 5-minute chart, I've been using the 5-minute chart to frame my day. I think it's the best time frame, in my opinion, to see the levels of rise and fall and just the consolidations overall. It seems to be better, in my opinion, than the 15-minute chart. Sometimes it will present better on the 15-minute chart. You know, I like to glance at both. However, the peak formations and things seem to be a bit easier to see on the 5. So this could be like end of day consolidation or Asian range, you know, that 8:30 to 3 o'clock time window where they put in a consolidation and then give you a peak formation low. And then you start counting the levels of rise from there, right? And then you come into the New York session. Let's say that there's already a high in place. A high in place means that there's already a peak formation made. And then coming into the New York session, they've traded back up into that in 3 levels. You may have heard this referred to as locking it in. And then right into the New York Open, they engulf down to the downside. That could be my indication to look for that short trade or to take that short trade. Now, what happens if there's not already a peak formation high? What if they're just going higher, right? So if there's a peak formation low in place and you come to the screen and you see, okay, there's 1 and there's 2, and then you come to the screen and they're still just going higher. Well, now what? How do I look for this trade? Well, what I'm going to do is I'm going to wait on that 5-minute chart for them to put in an up close candle followed by a down close candle. Now, these down close candles, they could be multiple. There could be a couple of them. What I'm going to do is once that up close candle is followed by a down close candle, I'm going to draw a line at the high of that candle. All right, now there's a wick. I'm using the body of the candle. And I'm going to wait for them to trade back up into that level in my session to see if I can catch the second leg of that M before or as it is forming. So on a 1-minute chart, I would be watching right here to see the behavior of price at that level. And if I get some kind of 3 push pattern up there in an engulfment at the correct time, that would let me know, hey, the 5-minute chart could wind up looking like this. So I am just trying to get in up here on the second leg of that M prior to the neckline even breaking down. In this case, the M has already been formed and I'm trying to get in on the retest. In this example, I'm trying to get in on the second leg of the M and I'm watching behavior of price at the high of that M. Okay. So I'm going to reiterate one thing real quick. What lines are important? If the M has already been formed, draw my neckline. If the M is in the process of being formed, I draw the high and I wait for them to trade back up into it. That part's very important and it's going to help you significantly to not miss trades and also to know which levels to identify properly. What happens if you believe, hey, I'm in level 3, there's the M. What happens if the market just does this? Okay, good. This peak formation is void. I can expect that maybe I'm going to get 3 more levels of rise, or maybe I've miscounted the levels, but regardless of any of that, that peak formation high is now void and we're still going higher. So I need to now wait and see if an M is going to now represent up high, just like gold did today. They just kept on scooting their way up. And I just kept adjusting that line higher and higher. Okay, so this is what I was just saying about the new scenario or different scenario. So I've identified 15-minute chart, 1-hour chart. Again, 3 levels of rise or fall. Level 2, I draw my line. First red day presents, or at least I have a peak formation at the high of the week. On the day, so now I'm looking on this day right here. I'm in level 3. They've traded back up through the high and put in a middle structure. I draw that line at the high. And I wait for them to trade back up in there to catch the second leg of the M. That's how you frame your day, right? I would be looking for peak formation low, levels of rise, and then the development of peak formation high. I kind of got ahead of myself. When you're looking at the peak formations, where do you draw your lines and how? Look at this, all right? Peak formation was made at the low of the day. Draw that trend line trick to identify where the end of level 1 is. There you go. There's level 1. There's the squeeze coming out of level 1. Explosive move. Level 2. Level 3. They put in that little middle structure right there. I draw my line. I wait for them to trade back up into the high. And then I wait for the price or the chart to confirm that this is maybe turned into peak formation high. Same thing down here. This is a different chart. Peak formation at the low of the day. Level 1 of rise. Trend line trick. M. W to continue. Now I'm in level 2. They pull back. Now maybe I'm in level 3. In level 3, they do a 1, 2, 3 to the high. And you can see the little the head and shoulders right here. So maybe I've missed this because I was expecting them to go back to the high one more time and it just breaks down. But that's okay because that's still a peak formation high at the high of the day. And I can go down on the 1-minute chart. Look, engulfment, pin hammer, then it dumps back down through the low. So if my peak formation has not been created yet, and I already come into the session with a sell high or buy low thesis, in a down moving market, and the peak formation has not been created, I'm going to have a down close candle and then an up close candle. That up close candle, this would be my down close, and then this would be my up close. That is the middle structure of the W. And I draw my line. And then I wait for the market to trade back down into that. And then I'm waiting for something down here to tell me on a lower time frame that this is going to turn into a second leg. Up moving market, it's just the opposite. If I already have a peak formation made, either earlier in the day, earlier in the session, or something along those lines. So I already have an MRW, and the market has moved away from that MRW. I draw the line at the neckline and wait for them to trade back up into it in 3 pushes. And then I'm looking to take my trade somewhere around this area right here. Now, this is where the 100 pip box starts to come in. Okay, this is where the 100 pip box comes in. This is how you use or can use the 100 pip box. It has different functions. It has different uses right here. Observe what 100 pip box level was that peak formation made. So let's say that this M has already been created. I would pull up the 100 pip box and look, maybe this is double zeros. Maybe this is 50. But what level on the 100 pip box was this created at? Because that might give me a strike level. See where they've been trapping volume. Where were they trapping above or below the 100 pip box level for me to get in at that level? Same thing over here. If I draw my line, because I believe I'm about to go into level 3 and they put in a middle structure, I can look and see where does the 100 pip box have the potential for that peak formation to be made. And then they make it at that level. Okay, well, that might give me a strike level to be getting in. And then as the market pulls away, for me to add in as necessary. I know these are some really crude paint drawings. I am not a very artistic fella, but it's still a decent representation. Now, these peak formations can be made, I've put them at double zeros, but they can be made at 50, they could be made at 75, could be made at 25. It really doesn't matter. I really like to see double zeros and 50 peak formations, though. That gives me a bit more confidence in what I'm doing, and they seem to work out a bit better. However, regardless of all that, peak formation low, I'm looking for a sell high opportunity. I've noticed, hey, I've got 3 levels of rise, and they've started to put in a peak formation high. Well, I pull up the 100 pip box, and I see, man, I'm at double zeros, 3 levels of rise, and they've started to put in a peak formation high. Draw that line, they trade back up into it. Well, what numbered box level am I getting in at? If this is turning into a peak formation high at double zeros, I just want to be getting in at, above, or just around double zeros to take that trade. At the very least, I want to be getting in above 75 for the move back down through 50 or maybe back down to 25. Same thing can be said as if, what if the peak formation was already made earlier in the day and I come to the screen and I see, okay, well, there's a peak formation made, but what numbered box level was it made at? Okay, it was made at double zeros. Maybe there's a break in structure to the downside, but that puts double zeros as my level for them to trade back up into 1 push, 2 push, 3 push, back up to double zeros. Where the neckline of that peak formation was made, that's my strike zone, my strike level. I just want to be getting in at, slightly above, or slightly below double zeros when that trade presents, okay? Is everybody with me so far, or have I gone far left, far right field, and I'm just sending this above everybody's head? I need you all's feedback. Now, I have got a flowchart, kinda, sorta. It's really crude. It is a very crude flowchart, but I want to better explain the thought process. All right, let's start over here in this little box. I always need to start, just like you all been seeing me all week long in the live trading. The way that I'm doing my live trading is exactly how I would trade if I wasn't on the live. I mean, I'm doing everything exactly the same. I start off 15-minute charts, 1-hour charts. Where are my peak formations? Am I at the high of a peak formation right now? Was there 3 levels of rise? Are we not at the high? Are we not at the low? Was there a peak formation made and we've been going higher? That's all super important, valid information. On the previous day, or maybe 2 days ago, was there a signal day? 3 days of breakouts, inside day. First red, first green day, 3 pushes out of the opening range. Was there a signal to be watching that pair? Looking at the 3 levels of rise, peak formation low, where are we at within that pattern? Are we here? Are we here? Are we about to be right here? And I need to start looking for my short trade. And I'm using all that information to lead me into, all right, so I've identified that information over here. I found my peak formations, good stuff. I've identified I'm in level 1, I'm in level 2, I'm in level 3. Yesterday was a first red or a first green or 3 days of breakouts, whatever. So that tells me just off of that information alone, now I know to look for either a sell high or a buy low opportunity on the following day. That's all in hindsight. Now I need to frame my day. Okay, so let's say today was a sell high day because yesterday was the first red day. Maybe yesterday was peak formation high day. Yesterday was 3 days of breakouts and they put in a peak formation high. I'm going to look for on the day itself, frame the day, peak formation low. What kind of day has presented? Is there already a high and low in place? Are they trading back up into the high? If that scenario hasn't presented, is there a low? Have they done 3 levels of rise? Is the M starting to form? Yay or nay? Has it already formed just prior to the session beginning? Do I need to wait for them to trade back up into the high before going vertical down? Those are all very important, valid questions based off of everything that we just talked about. Once I've identified the day and I've said, okay, there's a peak formation starting to form, or there's a peak formation that is already formed, I can look at the 100 pip box. Where is this peak formation forming? What level? All right, that might give me my strike zone. I'm starting to narrow it down further and further. We're getting closer and closer to the entry. But if we don't have all the steps leading up to, then I don't have a setup. I've got signals. You can have signals from here until Timbuktu, but if you don't have the setup actually presenting the way that it's supposed to, then you don't have a trade. All right. Now, let's say that, hey, that M has been formed and I have a break-in structure on the 1 minute chart. All right, they've made a lower low on the inside. What do I need to look for now? All right, I've got 3 pushes back up into the high. Everything is playing out as it should. Behavior of price at a level. All right, we've got 3 pushes back up into the high, and they put in a new M, 9:30, 9:45, coming into the new hour, 10 o'clock. Engulfment of the M, I'm going to take that entry because everything up until this point shown or developed the setup, and now this is the completion. They've now started to complete the pattern at a certain time of day. Everything is lining up, and I'm going to take that trade back down through the low or back down to the low of the day, whatever it may be, depending on what kind of trade it is. Put it simply, I have a signal, but that doesn't mean that I have a setup. The setup begins to form in one of these manners. My entry criteria starts to play out, confirming that a setup is forming. My entry criteria plays out all the way through. Now I have an entry. I'm going to pause this recording. So at any given time within the week, peak formation high, 3 levels of drop. So let's mark that off. There's a peak formation high, and then they've came down once and twice and a third time. That actually means, it literally means absolutely nothing unless there is a first green day and a reversal. Okay, so we're trying to frame this week. We're trying to figure out what's happening. Maybe 3 levels of drop, opening range for the week, Monday, Tuesday. Now there's a peak formation that's made at the low of Tuesday, and they've gone vertical back up. And then from that, you could see once, twice, 3 times to the high. Okay, so I'm trying to develop a thesis. I've got 1 day of breakouts, 2 days of breakouts, 3 days of breakouts, and looking at price, you can see level 1, level 2, and then maybe level 3. Okay, so that gives me at least a general idea of what to look for on Monday. I come to Monday and I see, okay, well, there was a peak formation low made from the low of last Tuesday. They've traveled higher. We already know, looking at peak formations in the previous week's level, they've triggered a previous week's level from 2 weeks ago, right at the beginning of the week, and then gone right back into consolidation. All right, so let's go and frame this day. I've already started to kind of develop a thesis based off of day 1 of breakouts, day 2 of breakouts. Okay, day 3 of breakouts, I'm looking for a sell high. The stair step is very clear. Very nice, right? Now I come into the session and I need to frame my day prior to that session beginning. All right, so let's figure it out. On this day over here, where the market had consolidated and gone back up, there's a peak formation low that's gone up once and twice, and it failed to make a higher high for the 3rd time, but we're in level 3, which is good. Peak formation high was made at the high of the day. Now, as the day progresses and continues, you can start to see the Asian range formed. Peak formation high, consolidation, drop, level 1, drop, level 2, and you can do this little trend line trick to help you identify the 3 push pattern and where the level 2 is ended. Drop, level 3, in the day in consolidation. But we were coming out of level 3 for the week, the entire week. This is a high of day, 3 days of breakouts, sell to the downside. Break in structure to the downside, higher high, lower low, 825. We're in level 1 consolidation or level 2. So if I'm trading this day right here, this looks very similar to exactly what's happened today. Peak formation in level 1 or 2 consolidation. This is a peak formation high within this consolidation. So if I'm trying to figure out where to take my trade from, they've came up 1, 2, 3, put in a middle structure. I draw my line. I wait for them to trade back up into the high. We're now in the session and they're trading back up into the high. 9 o'clock, new hours open. Is it going to let me go down? We can at least do the 2 minute. Let's say I've missed this. Ouch. Oh no. All right, no worries. They've made a lower low, break of structure. We've made a second lower low and they pumped it back up once. 1, 2, 3. You asked me what an engulfment is. Engulfment of the pattern. 1, 2, 3 to the high. They've engulfed these candles. So now maybe we have longs trapped. Maybe we have longs trapped and they're going to drag lower. Okay, so coming out of level 1. Typically, you want to get these trades from the high of the day, but they won't always do that. Catching it as a low-hanging fruit or a trend continuation trade down. All right, the thesis was built. We've gone up 3 levels. We're at the high of week. We're at the high of the previous week. And we have a peak formation forming in level 3. High. Do not counter trend level 1 on the way back down. I could do the same exact process over here. Start over here. Peak formation low at the low of the week. 1, 2, 3 to the high. Monday, Tuesday, Wednesday, Thursday. Thursday was a first red day. 1 day of breakouts, 2 days of breakouts, a week third to the high. I need to look for a sell high opportunity. Trades back up into the high on that day right there. And then you can go down, frame your day. Let's go down and do the same. Same exact process applies. We'll go down to the 5-minute chart. We'll take a look. On this day, there's going to be a peak formation low formed somewhere, some way. You can kind of see this larger peak formation that was made over here. We got another level of rise. Okay, so this is like 1 and 2 and 3. Okay, so let's take a... Oh, no, just remove all the indicators. Oh, well. 1, 2, maybe I draw my line because I've got a middle structure. They trade back up into the high. I've got my high formed. There's also a micro M here. So maybe I'm trading back up into the neckline. Then they trade back up at a certain time of day. Now we're in the New York session. We're in level 3, and they put in a larger peak formation high. You draw that neckline. Once they've broken down, I missed the trade at the high of the day. No big deal. It breaks down. I need to see them work the neckline. Okay, so now we're down lower time frame. They're working that neckline, and you get the little channel here, and it goes vertical. They're making lower lows and lower highs. All right, certain times of day. There's 930s open. All right, we're going lower. Level 3. All right, maybe I've missed that. Maybe I've missed this trade over here. But that turns into a first red day. All right, well, I know what to do after a first red day. Peak formation made at the high of the week. I'm looking for a sell high opportunity on the following day. All right, well, that seems fairly, simple enough. Let's go down. We'll frame this day. Oh, this was the day that I was just looking at very well. No, it just presented exactly the same. It presented exactly the same. Good stuff. So, peak formation low, made it the low of previous day, starts the count back up. If you miss this, there's still going to be opportunity to figure it out over here. Peak formation low, rise, 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 level 3, certain time of day, 8 o'clock. Okay, so I've missed the initial entry in level 3. No big deal. They've engulfed the neckline. Up candle, close, higher high, about equal. But I've missed the neckline engulfment. Okay, so I just need to look for a trade. This is where the peak formation was made. Let's pull up the 100 pip box since I failed to do that on the other examples because I'm being a little ridiculous. My apologies. Okay, so the peak formation was made at double zeros. And then we're trading at or around double zeros, kind of somewhere around 25. But in between double zeros and 25, double zeros might be my level. Are they going to let me go down? Yeah, they are. Oh, they even let me go down to the 1. Beautiful. Okay, so double zeros might be my level to watch. Higher high, there's a low, higher high, breaking structure to the downside, certain times of the day. All right, we want to wait for at 9 o'clock, around 9:30. You can see them working, peak formation low, 1 push, 2 push, 3 push back up into the high, and then engulf back down to the downside. Regardless of how you look at this, it doesn't matter. Double zeros is the level, and they're engulfing. I want to get around at or around double zeros, safe entry, whatever. All right. And that is how you narrow it down. I know I've just shown a whole bunch of shorting examples, but that is the idea. That is the sort of thought process that goes into every single one of these trades. Looking for 3 levels of rise, 3 levels of fall, peak formations. What level was the peak formation being made at? Based off of that information coming into the next day, framing the day, figuring out, okay, was yesterday telling me to look for a sell high? Yes. I'm going to look for 3 levels of rise, peak formations being made at certain levels. Was it 3 levels of fall? Maybe I'm looking for a buy low opportunity, depending on what type of day it is.